Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day of trading today, and hopefully you guys had a very nice weekend as well. In today's action, the S&P and the QQQ blasting off the top. Double gap up open, back to back into brand new all-time highs. Very bullish start to a very big week in the markets. And of course, a big reason behind the bullishness for today was the news that came out yesterday on Sunday. This one right here, the US and China talks sketch out rare earths deals and a tariff pause for Trump and Xi to consider. Of course, to consider before their infamous Thursday, October 30th meeting that is coming up very soon. So both delegations finding some common ground, and then President Trump saying, we will have a deal with China. Of course, the final details of that deal will have to be waiting. We'll have to wait until Thursday, essentially, until we get those. In other news today, we had some pretty big things across the board in terms of tech. Qualcomm announcing AI chips to compete with AMD and NVIDIA, the stock soaring up 11%. At one point today, Qualcomm was up over 20%. So Qualcomm entering the infamous AI data center race as well. The AI chips are a shift from Qualcomm, which is thus far focused on semiconductors for wireless connectivity and mobile devices, not massive data centers. Qualcomm said that both the AI 200, which will go on sale in 2026, and the AI 250, planned for 2027, can come in a system that fills up a full liquid-cooled server rack. So kind of trying to match the offerings from AMD and NVIDIA. A bit more competition in the good old data center landscape right now. Here's what Qualcomm had to say. We first wanted to prove ourselves in other domains, and once we built our strength over there, it was pretty easy for us to go up a notch into the data center level. Very interesting news for Qualcomm, which is a stock that, until today, did a whole lot of absolutely nothing for the last year of trade, and now finally starting to really break out as they get that big new revenue driver. In other news today, we had this piece from Amazon. Amazon planning to cut 30,000 jobs, which would be the biggest layoffs ever from Amazon, and will announce the first layoffs on Tuesday, according to a Reuters report on Monday. Not only that, guys, but Amazon's automation starting to kick in, possibly going to avoid hiring 160,000 workers by 2027. Now, additionally, guys, that could possibly save Amazon $12.6 billion in operational costs between now and 2027, with savings of about 30 cents per item processed through picking, packing, and delivery. Internal projections as well suggest the company could ultimately avoid hiring more than 600,000 employees by 2033. I'll move myself over so you can see that. 600,000 workers by 2023, even as it expects to double sales volume during the same period. Now, of course, this has to do with Amazon's advancements in robotics, which is a positive for the company, a positive for corporate profits, but can be argued that it's a net negative for the world, obviously, in terms of jobs and whatnot. But this is where we're kind of moving with AI, guys. A lot of these advancements in robotics and AI are going to lead to job losses, especially in unskilled labor. Not only Amazon has been talking about this, but Elon Musk has been talking about the exact same thing as he tries to ramp up his Optimus offering. He's been pretty much saying or talking about this thesis for the past 2 years, so it shouldn't be anything new to you, but this is just one of the biggest companies in the world, and you can see what's currently happening in the jobs market. So a lot of that labor will have to retrain, reskill, possibly for something a little bit better. It's very unfortunate, of course, but at the end of the day, this was the piece of the news that came out, which did move Amazon a little bit, but kind of sent some ripples across the market in terms of what we could possibly be expecting over the next decade with advancements in AI. Now, in terms of what we have on the table for today's video, guys. Well, number one, no earnings. I know there were a few companies that reported earnings today, but I will save you them because they aren't that sexy. They aren't that interesting. I like some of them. I mean, I guess we could have maybe covered Celestica or other things of that nature. Maybe we'll have time to catch up. But in today's video, I just wanted to prep you guys for the rest of the week. Where do we stand in terms of the technicals on the SPY, the QQQ, and all of our major indexes? So we'll be doing a rundown because we know the markets right now are running very hot, especially since Friday and this Monday session as well. Double gap up open. So how do we stand in terms of next week or this week coming up? We know it's going to be a very volatile week. We have a ton of earnings, from all the big tech players, Meta, Microsoft, Google, Amazon, and Apple. Additionally, you have a whole host of other tech companies and other large players in the market. You also have a very big meeting from Jerome Powell on the Wednesday session, in which he probably will cut interest rates by a 0.25%. The consensus right now is still 97% that he will do that. But of course, we know that a big focus this week is going to be on his stance on the economy, inflation, the labor market, and all things of that nature. Thereafter, we get GDP on the Thursday session, another big release for the economy. And then on Friday, PCE inflation data as well. That's going to be a big piece of news. And then, of course, on Thursday, we additionally get all the details from the meeting between the US and China in terms of the trade talk. So it's going to be a very busy week, possibly a very volatile week as we move through all of those catalysts. So we'll take a look at the rotation in the markets and determine where can we possibly be best positioned. Is it good to buy now? Is it good to wait? We'll talk about it. Thereafter, we will do the same thing across our big tech list down here. We know that most all the big tech players will be reporting their earnings this week. So which of these companies are currently positioned for possible nice swing trades into their earnings and or possible nice long-term portfolio positions? At the very end of the video, we'll take a look at our biggest gainers and losers of the day, of course, of which there are many names to the downside. Of course, a lot of your critical minerals plays unwinding today because of the deals that might be brokered between the US and China in terms of rare earths. So that narrative kind of unwinding right now. And a lot of other names to the downside, which we'll talk about. And then we'll also talk about some of the names that are posting big gains. A lot of the names that dropped a significant amount over the past 2 weeks of trade have come roaring back. Is it too late to buy them? We'll talk about that as well. And at the very, very end of the video, I'll show you guys just a few little trades that I was able to take today in preparation for this upcoming very large week. So that's going to be it for today's video, guys. Let's get right into the action, shall we? The SPY up 1.18, the Q's up 1.78. As I was saying, double gap up open, right? Very bullish market, not quite daily overbought conditions. Can we possibly run a bit more? Yes, but you can't get too greedy right now, right? The weekly is flying. We're getting a bit extended from the 12 EMA. We are clipping into somewhat of the top of the trend line right now. All things to kind of keep in mind when you're looking to position. On the monthly, you're looking quite far away from the 12 EMA as well, creating some distance here. So if ever big tech earnings are a disappointment, or the meeting between Trump and China are a disappointment, and possibly if Jerome Powell is just not very nice to us in terms of his stance on the economy, the weakening of the labor market or whatnot, you can get sent down a little bit. So I wouldn't say this week is in the bag necessarily. We'll have to wait until all those things really come and pass us, but definitely very bullish momentum in the markets right now, which can lead people to be a little bit more greedy than possibly they should. In terms of the S&P breakdown, you can see that most of your major sectors were doing very well today. Big tech with some huge outperformance, semiconductors very strong, and all the big tech names except for Oracle really pushing to new highs, right? Or relative local new highs. In terms of the financials, not too bad, but insurance still somewhat of a soft point in the market. The banks and the credit card companies, not too bad. I will remind you, both Visa and MasterCard have earnings this week. You're going to get to hear from Visa over the course of the day on Tuesday, and I believe MasterCard, if I'm not mistaken, is this Thursday, October 30th. So you're going to get to hear from both of those. They can move the financial landscape as well. Healthcare, not too bad of a day, but somewhat mixed. And the bottom half of the market also somewhat mixed too. Consumer defensives still continue to be somewhat soft as most of the money is pouring into growth right now. And the bottom half of the market responding well today. We had some nice declines on the 10 and 20-year yields. And we know that these are very interest rate sensitive sectors. So that's what really helped buoy them a little bit higher. Moving on to the one-day relative, guys, you can see today's performance even better to where most of the market was green, only defensives and materials lagging a bit behind. The market led by communication services, which, let's be honest, is largely Google and Meta. And then, of course, we had technology, consumer cyclicals in second and third position. On the 1 week relative, at the all-time highs, how do we stand right now? Not too bad at all. Technology actually leading the front. And the only ones to the downside, defensives and basic materials overall. So can there be some possible opportunities in the rest of the market? Yes, and that's our job, to kind of find where the pockets for investing currently stand right now. So in terms of our technical analysis on the SPY, guys, I mean, I just talked about it a few minutes ago, but just to reiterate, clearly the daily bulls are in control right now, but don't get too complacent, right? A few more days like this, or this entire week like this, you might just be heading into some form of a temporary local blow off top, and then you'll be looking for a recent higher low. In the event the markets pull back right away from tomorrow, let's just say, right, the futures are red right now. We don't know what's going to happen. Do we have a decent amount of support and space below us? Yes. Line in the sand level is 663.76. You can call it 664. Looking for a new daily higher low, possibly coming back down to test prior resistance, which will be newfound support for the bulls, possibly to embark on the next leg of the all-time high rally. The most hated rally continues at this point. And we call it the most hated rally because there's some concern still in terms of the macro, right? Inflation is still sticky. The jobs market is weakening. But then on the other side of the coin, you do have a very booming AI narrative, which some people argue is currently in a bubble right now, right? That might be your personal perspective, but just always remember what the bearish narratives can possibly be at any given time in the market. These are all the possible bearish narratives. The AI bubble and the market overvalued. That usually comes into play when any one of these other catalysts kind of hit home with a big news headline, either the government shutdown, the jobs creation softening, China tensions and tariffs. We'll get to hear about that later in the week. And of course, the corporate credit and bankruptcies, which we heard about just a few short weeks ago, which did rattle the markets for about a day and a half. But as we've been saying, the bullish tailwinds are real right now. We still have strong GDP, low unemployment, low-ish inflation, though sticky around 3%. We saw that in the CPI last week. Strong earnings, especially so far. 85% of companies that have reported so far have beat on revenue and raised their guidance. That is not small. We also have the AI megatrend and, of course, the 2025 and 2026 $4 trillion worth of tax cuts. So there are some very bullish tailwinds that people, either willingly or unwillingly, kind of just, put behind them and say, listen, the market's just so overvalued. We're not looking very good right now. And that's possibly because of anecdotal experience in terms of just consumer discretionary spending, right? But never forget, the consumer is currently fully employed. So you might be paycheck to paycheck and spending might be tight right now, but you're definitely not looking at an environment where you're looking at a possible economic collapse or things of that nature, or a recession that you would have to start to see massive unemployment. So we'll see what happens, but that is your analysis on the SPY. The weekly bulls still retain full control of this chart right now, looking very good. But as I said, right, creating a lot of space right here off the lows. But whenever we do get too extended from the 12, even in the context of the rally since April, you do tend to get something that happens that pulls us back. And this week, you definitely got a lot of some things that could possibly pull us back. Moving on to the QQQs right now. Qs 1.8% to the upside, big gap up. Back-to-back days of trade right there, looking for a continuation of the daily uptrend. We're not yet daily overbought, but kind of the same concept as the SPY, right? This is a very long trend line, and you're currently clipping into almost the top of it right now. So we'll see what happens, but the daily bulls remain in full control. Your line in the sand level remains at about 600. If you drop from here and fill those gaps, you do have prior all-time high resistance, which is going to be current support for the markets, possibly looking to embark on one more leg once that consolidation is finished. In terms of the weekly, you're not looking too bad at all. Still very bullish weekly control. So as long as the longer-term bulls control the higher time frames, all dips should indeed still be buying, but we don't get complacent. We don't start buying overvalued companies. No. You're still trying to find value within some of the names that have ran already. Moving into XLF right now, financials, not too bad of a day for them. Brand new daily uptrend and starting to clip above our big old resistance range. Resistance from back here, support from back here, and now peeking their heads above it a little bit. 53.30 down to about 52.85. Not looking too bad on financials. It was a 1.5 month daily downtrend. The bulls now playing ball. Daily uptrend means your weekly consolidation phase is possibly finished, and you might be looking to still gain the levels and reattack the all-time highs. It was also monthly consolidation. This is the chart that I kept bringing up in terms of nice back tests into support and the 12 EMA. 52 down about 50. My favorite names in financials right now, possibly JP Morgan looking good for a little bit of a rally into brand new highs, reacting nicely from this 12 EMA that the bulls have defended since those April lows. Goldman Sachs is already ahead of them with that exact same pattern, just looking for weekly continuation. And of course, some other names that are notable would be Visa and MasterCard, both currently just soft, right? Very soft. Visa hasn't really done much for the past 6, 7, 8 months, but this consolidation is very nice. It does look like a big old bull flag at the top, looking for a pending breakout. We'll get to hear from them. If American Express's earnings last week are anything to go off of, I do expect Visa and MasterCard to have pretty solid earnings. And even MasterCard, right? It's just been consolidating here. Big old bull flag at the top, possibly looking for the good old breakout. So this might be one of the last times, now or even after earnings, if they drop, it might be some of the last times that we can possibly accumulate these very high quality companies. Moving on to healthcare right now. Healthcare, not that bad of a day at all. Currently still clipping into resistance. That resistance is 148, down about 144, and a lot of space for the bulls to work with on any pullback. Anything above 141, looking for a new higher low to possibly attack it in 2 stages. That's if we don't just blast off through the top from here. The time frame that makes the most sense for me is indeed the weekly. Clear weekly uptrend, looking quite strong. And one of my favorite names in healthcare right now is probably Eli Lilly for a bit of a swing trade, right? Breaking above your downtrending channel right now. The EMAs are right down there. We didn't quite make it to support, but this is some really nice confluence looking for a breakout. I will remind you though, Eli Lilly has earnings this week on Thursday morning. So, right, it might be in the cards if they have decent earnings to possibly start blasting off from there. Eli Lilly is probably one of my favorite pharmaceutical companies in the game right now. Very wide product suite. And that company's been consolidating arguably in around the same prices for about a year and a half. See, these are March 2024 prices, and we're kind of still there, and they have been improving fundamentals all throughout. Moving on to semiconductors right now, SMH, brand new all-time high, double gap up open back to back. The daily uptrend is in full control by the bulls right now. Any moves lower, you're going to maybe be looking to back test prior resistance and the daily 12 EMA right down there around 346. So we will see what happens, but a lot of the action, in my opinion, on semiconductors this week is going to have to do with your guidance from all the big tech companies in terms of forward spending through the end of the year. And maybe we might get some insights into how much they will spend into 2026, right? So not looking too bad there, but still, some segments of that are getting a little bit extended right now. But I mean, hey, the bulls are in absolute full control, right? This is still the exact same big weekly leg. It's been, we've had what, like almost 9 weeks, 8-9 weeks in a row where we've been able to set almost new highs every single week. We are very extended right now on the weekly RSI. It can extend even more. We know that, right? It's done this several times in terms of past historical performance. So we will see. Consolidation mode is not upon us just yet, but now is possibly not the time to be getting super greedy, especially on names that are very extended on the technicals. You kind of want to be finding some names within this niche that have pulled back or have been establishing nice ranges. Shout out to, we'll take a look at this one later, but shout out to NVIDIA, man. NVIDIA was kind of one of those. You don't got to look too far. It really didn't move since July, despite having very strong fundamentals. See, this one isn't extended. I would arguably rather buy NVIDIA, where we were talking about it down here, back here, rather than buying something maybe like, like Micron and this huge breakout right now, because you're not getting the best deal. The fundamentals of Micron are very strong, but there was a time to buy Micron, right? And other things of that nature, names like ASML, you know what I mean? Like there was a time to buy ASML. Now, obviously, a lot of these have run super hot since then, but just in terms of the style of trades that I look for to get the breakouts from big levels and to really front run some of these big moves rather than getting in late after these moves have already happened, right? So moving on to the IWM Russell right now, the Russell not looking terrible today, 0.35% to the upside. The trend is kind of all over the place. You could argue it is the continuation of a nice daily uptrend right now. Kind of choppy price action this entire time as we kind of move back and forth between the yields and how it impacts on the Russell every day. That being said, your weekly bulls are still arguably in control right now. Your weekly higher lows are kind of down here, right? 237, 238-ish. So they do have a lot of space to pull back in the event that the markets unwind this week and go for a bit of trend continuation. The monthly on the Russell shows that this one is looking very solid, but any pullback on the SPY QQQ will send this one back to about the 231 to 225. I've been very clear on my positioning on the Russell, especially in the last 4 or 5 weeks of trade. The time to position was potentially still back here, but you got to leave some money open for the DCA in the event that they give you the good old monthly retracement, right? That is always possibly on the table, but the Russell looking really good for a thematic expansion into the next 2 years, possibly. That being said, not all sectors have been reacting strong. That means in terms of your XLP consumer defensives, right? Still very weak. If you look at this one on the monthly, we have not moved since July of 2024. And it doesn't usually move until you get some sort of a bearish reaction in the overall markets that really takes a lot of the growth names down. So consumer defensives, not really the best place to have been in the past year, but we do have nice support down here, 78.5 to 76. Usually when we're running very hot on tech, this is when I like to balance with a little bit, keyword, a little bit of defensive names that could be well positioned, right? Looking to possibly gain some levels here. And one of the better ones, in my opinion, that's just been consolidating for, let's call it the past, 9 months, has been Costco. I mean, the valuation of Costco is not the best in terms of it being cheap, but consolidation has been very nice. It does remind me of this move back here, 2021 to 2022, when we had a big rally and then a lot of consolidation here. Same concept, really big rally and then a lot of consolidation so far. So Costco is a position that I'm slightly adding to as it's at these lower levels, some of the prices that we've got. And that being said, guys, we covered their earnings, right? At the end of September, they had really strong earnings. But as I said, the stock has ran a ton. So while these names, some of the more bullish names in consumer defensives overall are consolidating, that's what I kind of just want to add to some of these positions overall. Utilities still a very strong sector overall. That being said, they had a nice phase of consolidation down into the daily 12. The clearest time frame for me, in my opinion, is still the weekly time frame. The weekly bulls in absolute full control of this one. Shout out to some of the better players in utilities right now, especially in terms of electric utilities. Vistra is one that I am playing more and more, and possibly looking to build some long positions, looking for a new monthly leg of expansion. This one is very strong. We talk about EMR as well. EMR, very strong name, same concept, nice monthly consolidation into the 12 EMA, looking for the possible sweep to the upside. And shout out to Next Era Energy, also looking good. I mean, I don't know, but this is kind of a very nasty inverse head and shoulders, right? Might be looking for the continuation. We identified this one when it was down here, and I've been talking about it on and off for the past few weeks. So I'm going for some of the more established energy players, right? Of course, you know, we can talk about the Bloom Energies of the world, et cetera, right? Companies that manufacture different production processes for converting, natural, this one does natural gas into electricity. But a portion of my plays that I want to use for, data centers and whatnot, the power requirements in the next few years are companies like this, already established players with already very large revenue streams that are set up to really, build into the grid and really, serve some of those requirements that are needed by big tech. And lastly, real estate. Real estate's actually starting to break out a little bit. We know it's been consolidating now for a better part of the last 6 months, starting to finally break out. You can see it a little bit in the home builders, right? The home builders, they had a big retracement, trying to build a new base of support. It was a big monthly downswing here for about 8-9 months. Now finally got the 3-month, 4-month pop, the breakout, the retest of support, and possibly looking for the run, not looking too bad. So we can play the home builders, we can play some of the mortgage companies. Shout out to Rocket Mortgage, which is probably my favorite mortgage company, but I know a lot of you guys are playing names maybe like LDI, names like maybe, Fannie Mae. A lot of people ask me like, hey, can I do this one? I mean, sure, you guys can do whichever one you want, but my favorite player in the space remains Rocket Mortgage because of their dominance of the online mortgage space. That's an overall rundown for some of the sectors and where we could possibly find some plays that are just outside of, the big tech names or the high flying names that we talk about every day. Just some ideas. In terms of the VIX right now, the VIX very low, 15.8, but this week we have a ton of volatility catalysts. It's just going to take one or two to kind of send us right back up to 18, 19, 20. But overall, the volatility from the China news 2 weeks ago has largely been kind of priced out of the market right now. So at the current time, when the VIX is low, right, I'll remind you, right, when the VIX is high, it's a very good opportunity to sell some options, covered calls, short puts, things of that nature. When the VIX comes back down to lows, that's when you kind of want to go shopping for some leap call contracts on some of the companies that you might want to ride over the next 12, 18, 24 months type of thing. Companies that have possibly not had tremendous rallies in the last couple of months. A few of my positions that we were eyeing in the past few days with the VIX being low and some consolidations, one of them was NVIDIA. Some leap call options from here. Another one that we were looking at was Meta, some leap call options in the last few days. Also some decent positions there. Some leap call contracts on Amazon in the past couple of weeks have been some good looks. Those are just a few of the names. I'm not going to give you guys all the plays, but just a few of the names that you guys should recognize a lot. Some of the names that just haven't broken out as much as, let's say, like a Google or, something of that nature, right? So that being said, or like an AMD type of thing, right? So that being said, that's it for the VIX. If we move on to our yields, we talked about it already. Nice little downswing on the yields over the course of the Monday session. You're looking at a 0.4 decline on the 10 and a additional 0.7% decline on the 20. The weekly downtrends are now well underway. We'll get to hear from Jerome Powell over the course of this week on his stance on the economy and his cut on interest rates. That should help bring some of your longer term yields down, and as a result should help propel this bond rally a little bit further, right? As we kind of try to breach out of the good old 93 resistance and start moving through the targets here into the mid and possible high 90s over the next few weeks, over the next few months. Talking about gold right now, gold actually came down and swept the lows, unfortunately, cracking 4,000 to the downside. The bulls are looking to play a little bit of defense, but that is a daily downtrend. Daily downtrend means that weekly consolidation is underway. And as we've been talking about, maybe a target could be the 12 EMA at about 38.25 right now. The bulls have done a good job of holding this 12 EMA. I mean, they broke it a few times here and there, right? But it has been an area where the bulls have been wanting to play defense a lot. In the past couple of weeks of consolidation, we've cooled off some of the weekly timeframes. We've cooled off the daily timeframe a ton. And even the monthly, guys, I mean, it's still overbought, right? But look at this monthly candle. You would like to see them come down a little bit here into possibly the month of November. I mean, I'm not looking for the crush, right? We're just looking for some consolidation to kind of cool off some of these higher time frames. If you're asking me if I'm looking to position on gold, not just yet, but if you send us down a little bit more towards possibly like under 38, 37, we might be able to look at some plays, provided that the price action slows down a little bit and they establish a bit of a range of consolidation where we can actually play with some support levels. Because right now it's just kind of a battle, and the daily the daily bears are definitely in control of that battle for the time being. Taking a look at Bitcoin right now, Bitcoin had a good weekend and a good follow-through day on Monday, coming into resistance 119, 120, let's call it, down to about 115. This $5,000 pocket has been previous resistance for Bitcoin, you know, for a better part of the last 4 months since July, and now we're reacting from it once again. So the daily bulls are in control. A lot of space being created right now. If they cannot breach through this one, you got a lot of space for a new daily higher low. Anything above 106.6, excuse me, looking for a higher low for possible a second attempt in that range. That's if they don't just try for it right away type of thing. The weekly is not looking too bad, although very choppy. The clearest time frame for me, in my opinion, is the monthly. This is arguably just a bull flag, same as this one was, same as this one was, same as this one was. Consolidation above our support range, 108 down to 99. So I was telling you guys that in the past few weeks when it was coming down here, I was accumulating some Bitcoin position and some Bitcoin proxy plays like MSTR, which has really been beaten down recently. And I'll be looking to carry those positions into Q4 and Q1 of 2026, just looking for the next leg of the good old Bitcoin expansion. Moving into Ethereum right now, Ethereum not looking terrible, right? The bulls trying for the new daily uptrend. This is a big shift, man. They haven't had a daily uptrend in quite some time at this point, reacting nicely from our support range, 4,000 out of 3,700. We were very clear on the channel saying this was a very nice area to be accumulating some ETH positions if you do believe in the expansion of that asset overall. It was nice weekly consolidation, weekly downtrend, nice monthly consolidation, looking for the good old monthly cup and handle, and now they're reacting nicely from it. So ETH, not too bad at all, right? But let's be honest, can we possibly dive into lower lows? Sure, which is why I've been saying accumulate some here, but leave some room to possibly accumulate at the lower level. At the end of the day, you are just looking for a monthly higher low. You don't know if they're going to hold this or go a little bit lower. That'll probably depend on the overall stance of the market here into the next few weeks of time as we move through earnings, as we move through all of the geopolitical catalysts as well, right? Moving on to now our big tech segment. So moving first into good old Apple. Apple clipping into brand new all-time highs before their earnings on the Thursday session. Beautiful new daily uptrend by Apple right now. But of course, a lot of this price action is just short-term. Big focus will be on their earnings. The bulls control all the time frames right now. They control the daily. They control the weekly time frame as well. But the stock is running a little bit extended here into earnings. We're not overbought on the time frames on the daily or on the weekly. However, we're getting quite extended here from the 12 EMA on the weekly time frame and quite extended from the 12 EMA on the monthly time frame as well. That doesn't usually last for extended periods of time. If you go back in history, Apple doesn't usually stay that extended from the 12 EMA. So a poor earnings release could pull them back, or a bullish earnings release could provide the last leg of the lift before a bit of consolidation for Apple overall. Now, of course, Apple's been running because of the release of their iPhone 17s, sold out in China, of course, and the rest of the iPhone 17 models are currently on back order for about 3-4 weeks in most locations worldwide. That being said, last quarter was a big one for them. They showed the best quarter of revenue growth since December of 2021. We will be looking for them to continue on that winning streak. And we know that Apple has been struggling with AI. So, of course, any relevant releases on AI could be very bullish for this stock. Is it a good time to position prior to earnings? In my opinion, I don't really think so. Apple's been crushing it recently, but the last time I was buying Apple was down here during the consolidation phase where the valuation made a little bit more sense. Now, the fundamentals are getting a little bit too stretched for me. Apple really at the top end of some of its historical price to earnings ratios. And as a result, I'm just not either swing trading it into earnings or I'm also not buying any longer term positions on it, but I am holding all these shares that I currently have. Moving on to AMD right now, AMD blasting off through the top. AMD and NVIDIA got hit from the Qualcomm news a little bit, but they recovered very nicely. So that being said, daily uptrend continues at this point for good old AMD. A lot of room for them to work with. Anything above 225 on a pullback, looking for a higher low for possible further trend continuation. Daily overbought conditions right now. Resistance, or rather previous resistance, current support sits at about 240. So maybe looking for the good old breakout retest on any consolidation. I mean, AMD is running very hot right now. Weekly RSI is currently sitting at 83. 83, guys, right? Your weekly higher lows are all the way down there at 150. We don't know where this one is going to stop. You got to go with psychological numbers, something like a 275 and then possible 300. Does AMD still possibly have legs? Yes. Right away? We don't know, of course, right? But I'm very bullish on the company into 2026 and 2027. My price target for into 2026 is above $300. We don't know if they're going to get that done in one single leg of expansion, but the revenue and EPS growth multiples speak for themselves. At 240, the stock was getting a little bit pricey at a 2.07 peg. We know that a lot of other companies run a lot hotter than this, but just to say, right, we can't really say the company is cheap anymore. So if you're buying AMD, you kind of have to be into it for the long-term thesis expansion, which is the expansion of the market cap of the company over the next 2-3 years in terms of EPS expansion, in terms of revenue expansion as well. We're now coming into some of the top end of a lot of your analyst price targets. So we'll get to hear from them for their earnings next Tuesday. That should be a very interesting release. Am I buying AMD up here? No, because I bought all the AMD that I wanted back here and lastly here with some leave call options. If I didn't have any AMD, would I be opposed to positioning? No, but would I position as heavily as I had back there? Probably not as well. So AMD right now does remain a buy for me, but it is a nibble. It's not a full send buy right now. I do believe that you're more late than early at this point in time, right? In terms of short-term gains, right? For long-term gains, the thesis still makes sense. On to Amazon right now, the good old company that plans to not hire 600,000 people, which is absolutely crazy to think about, right? Up 1.25%, even in spite of that news today. Nice daily uptrend, but we know Amazon has earnings coming up on the Thursday session. The stock's going to move about 6% up or down. So 6% down from here would put you right back into the confines of support. And you guys know the drill. I will be buying Amazon if we can find it down there, 210 and to 200 again. I think that's a phenomenal location. 6% to the upside, of course, you're going to be kind of on the verge of new all-time highs or very close. Amazon, I've been very clear on this company, guys. It's probably one of my favorite bets in the market right now. It has been notoriously lagging behind the rest of sector peers and the index this year, only up 3.46% for the year. And keep in mind, all those cost efficiencies that they'll be having in the next few years, that'll be really good for free cash flow and bottom line profits as well. And of course, the revenue run rate is very clear from Amazon. This will be your first company to hit almost $1 trillion of revenue in 2028. EPS is going to be expanding nicely over the next few years as well. The thesis for Amazon is very clear right now, in my opinion. We've just been in a bit of a consolidation on the monthly timeframes, 3-4 months, allowing us to accumulate some shares, right? Now is the time to buy Amazon, because eventually when the stock does rally, and it will probably rally, I'm not saying tomorrow, but if earnings is really good, we might just get that Google, Microsoft, Netflix, AMD style rally to where, and even Apple, right? To where it just starts going and then people just start piling into the trade and then it gets excessively tough to build positions thereafter. So still a decent time. I'm not a fan of buying all these companies before their earnings, But Amazon, I am a fan of buying this one before earnings, and I have bought it before earnings. Moving on to Google right now. Google, strong move by Google, man. 270 on Google stock right now. It seems as though just yesterday we were talking about all the problems that Google was facing all the way back here, and now the stock has rallied a tremendous amount. Guys, from the tariff lows, right? Google is up almost a 2x, and it's Google. It's not just like a $10 billion company, right? Phenomenal move by this stock, but I'd be lying if I told you we're not a bit extended. Daily uptrend, full control by the bulls. They have earnings on Wednesday. We'll see what they have to say. Line in the sand down here, 245. Any move lower, looking for a higher low, possibly using some of these guys, 255 into the 12 EMA to maybe backtest and run if ever earnings are not well received by the company. We'll see what happens. On the weekly timeframes, we've been overbought, man. This is like bearish divergence right now. So just something to pay attention to. The weekly higher lows are down here at 236. So any unfavorable earnings release from Google in terms of search revenues or, cloud growth or things of that nature, in my opinion, it's going to be all on this, right? Search and cloud are going to be the biggest two things for Google over the course of this upcoming week. So just keep that in mind. Google right now in around 250. It's a 1.73 peg and a 26 forward price to earnings multiple. We will redo all of these numbers come Wednesday after their earnings. Is Google buy before earnings? Yes, if you have a longer term time horizon, the valuation still makes sense. Of course, you will never feel like you're getting a good deal when the chart looks like this, but if you just focus on the fundamentals, right, that's when you know that you're not getting the worst value proposition out of Google shares right now. Of course, it's not as good as some of us who bought all the way back there, but still, if you have a long-term time horizon and if it's for a long-term portfolio, I don't necessarily see a problem with averaging up on the stock. Would I be buying as heavily into Google now as I was back here? No, but would I still include it as part of a DCA with my paychecks? Probably yes. Moving on to Meta right now. Meta is also probably, if I had 3 favorite bets in the market right now in terms of names that haven't ran as much as some other names recently in the last 3 months, it'd probably be Amazon, Meta, and NVIDIA. Shout out to Netflix as well, which has been consolidating from the top. But, those couple names are some that have not broken out just yet, still with fantastic forward growth estimates, right? So Meta currently putting on a little bit of gas right now into earnings, up at 1.7% today. Nice daily uptrend. The higher lows are set at about 700. So the bulls have a lot of space to work with. I'll remind you, last quarter, Meta gapped up 11% on their earnings and then did absolutely nothing the entire portion of the quarter. So Meta lagging a bit behind, still a weekly downtrend. The bulls are looking to make quick work of that weekly downtrend. And that comes from your monthly bias, right? Beautiful monthly uptrend right now. 3 months of consolidation into support, not quite the 12 EMA, but this, guys, is a very nice bull flag on the monthly, right? Possibly looking for some expansion. So I have been accumulating some Meta as we came down into that location, and I would not be opposed to buying a bit more Meta into earnings. And then if for ever which reason we drop after earnings, I'll be buying down there too, because we'll just be looking to complete the bottom end of this pattern, monthly consolidation into forward growth. That being said, the fundamental thesis for Meta is very clear right now. Consistent EPS for the next 4 years, nice growth, and consistent revenue growth here over the next 4 years. So if earnings makes the stock come down, I largely think it'll be short-term sentiment, not erosion of long-term fundamentals. Moving on to Microsoft right now. 1.51% to the upside. Microsoft really starting to put on the afterburners as well into their earnings, which is going to be on the Wednesday session. Am I positioning on Microsoft right now? No, not really, but Microsoft will have to prove that that Azure growth number last quarter was not a fluke, right? 39% year over year. Now, what we covered last time that they reported earnings is that a lot of this growth, most of this growth was coming from the OpenAI deals, of course, right? So that being said, we will see if they can post good numbers. If the numbers are a bit underwhelming in relation to last quarter, it would not be surprising to see Microsoft dive a little bit down here and maybe retest this area where the bulls were kind of playing ball with the bears down here between 517 and about 500 psychological for Microsoft overall. The chart's not looking too bad. The weekly bulls are looking for expansion of a new leg of a weekly uptrend, and the monthly didn't consolidate enough for me. I was looking for a back test of the 12 EMA down there at 470, and I was looking for a bit more favorable valuations right now. Microsoft is one that, unfortunately, I have not bought, guys. I have not bought Microsoft since down here. I spent like a year accumulating more shares down there, and now we're just kind of letting the profits ride. Would I be buying shares up here? Probably not. In my opinion, it's not the best buy in the market right now, as the valuations are at the top end of the range. But would I be selling any shares on Microsoft? No. Obviously, if I had to build a long-term portfolio and it's my first month in the market type of thing, I would include Microsoft, but as part of like a long-term DCA pattern for my portfolio, right? Moving on to Netflix right now. Netflix down again. Small though, bit of a flat day for Netflix, but one thing's for sure, daily downtrend, not quite oversold conditions, but almost, and also a weekly downtrend as well, which leads us into the next chart. This is just monthly consolidation, possibly going for the 12 EMA touch. Now, I am buying Netflix at these levels, 1,100 down to about 1,000 into that pocket. I think the valuation, as we covered after their earnings last week, is now finally manageable. Up here at 1,300, it was a bit of a stretch, especially in the short term. Long-term thesis is clear, though. Management is looking for expansion of the business into $1 trillion market cap by 2030, and now it's currently sitting at about 460. So you're getting a really nice discount right now at a 1.82 peg and a mid-30s multiple. I think it's a decent buy in terms of long-term shares. No swing trades for me, but long-term shares, I will be a buyer. On to NVIDIA right now. NVIDIA, 2.81%. We've been talking about this, right? The Bears tried for the daily downtrend. They couldn't get it. The Bulls played really good defense around the 180 mark. And that was very logical, right? Because it was a nice weekly uptrend. We broke out from the top, back tested prior resistance, which is current support, back tested the infamous weekly 12 EMA, and now they might be looking to run a little bit further. Now, how I expect this week to go for NVIDIA is as follows, right? If all the big tech companies report very large CapEx, they might hurt themselves, right? Because that'll be less free cash flow for them, et cetera, et cetera. However, that will favor names such as AMD and NVIDIA in the process. So I'm expecting NVIDIA to have, good sympathy follow through from that CapEx spending. So we're looking for the expansion of the NVIDIA trade. The monthly, they consolidated for a little bit, but we are still running a little bit hot. At the end of the day, it is NVIDIA. It likes to run a little bit hot. Sometimes it'll give you back test the 12, not all the time though, right? That being said, we can focus on long-term valuation in around the 175 mark, where NVIDIA was trading recently, very recently. It was trading for a decent valuation, and I still do maintain that even here at 190, it's not that bad, right? My thesis for expansion for NVIDIA into 2026 is expansion of share price into 250. So there's still a lot of juice left in the tank for the stock, in my opinion. Not as good as some of our leap call entries down here. This was a greedy long, I will admit it. A very greedy long, but a long that makes sense. It's kind of gone a little bit. Would I hesitate to add any NVIDIA shares up here? No, but would I be adding as heavily as like this period right there? Probably not as well. So it's a nibble. So you can see a common theme, right? A lot of these names are still buys, but some of them are nibbles. Some of them are decent buys like Amazon, like Netflix, like Meta, et cetera, but some of these names that have ran so far, are just nibbles. Most of the positions should have been built prior, but decent swing trade capacity for NVIDIA right there. Tesla having a very good day today, 4.31%. At a certain point, Tesla was almost up 6% today. Very strong. The bulls looking for daily uptrend expansion after the earnings that we covered last week. Not looking too bad at all. The weekly is possibly also looking for a bit of expansion. They set some lows, never came into tested support down here, 405 to 380. And it's not looking bad for some possible expansion. We will see if the bulls can possibly get it done. The next target for Tesla, 488, prior all-time highs, and then the ever so elusive 500 psychological. Now, I'll remind you the thesis for Tesla. Of course, a lot of people focus on the short-term negatives. You might be asking yourself, how can the stock possibly moving higher after somewhat lackluster earnings and at very high valuations? Well, of course, it's because of the long-term thesis, guys. The long-term FSD thesis, the long-term energy thesis, the long-term optimist thesis, et cetera, right? So keep that in mind when you are looking at Tesla stock and don't be too frustrated. Moving on to Palantir right now. Palantir, brand new all-time high today. Palantir was up about 4.5%, 5% today, and then sadly pulling back a little bit. Palantir is earnings next Monday, so not too many trading days left before, but the bulls making quick work, well, not quick work because we spent a lot of time there, right? But now we have a well-established area of support. And then on the lows, of course, are down here at about 170, 169. Decent amount of space right now to build upon this bullishness. We will see what happens for Palantir earnings. This was arguably a nice bull flag coming down hesitating, back testing the 12 EMA, and now looking for a new leg of weekly expansion. Palantir bulls have really been using this 12 EMA a lot over the past year as they go through this expansion cycle. Unfortunately for us, the valuation of Palantir right now is somewhat very, very steep. It's a $450 billion company that is currently only bringing in, I mean, this is so crazy to think about, right? It's like 100 price to sales. The company is only bringing in $4 billion of revenue this year. Sure, they're expanding quickly and will almost 2x their revenues by 2027, but still, right? It's running ahead of itself a little bit. So positioning on Palantir up here, you really got to have that long-term thesis, because otherwise it doesn't really make sense, kind of like Tesla. But very good movement by the bulls right here. Moving on to SOFI right now. SOFI up 3.5% today. SOFI has earnings tomorrow morning, so we'll cover this one on the channel tomorrow evening. SOFI, UNH, PayPal, UPS, some of the bigger names tomorrow morning. And then after the close, you get Enphase, you get Bloom Energy, which has been one that's been running red hot, Booking Holdings, and Visa. So we'll be covering a few of those earnings tomorrow after the close, of course. That being said, SOFI, $30 flat, guys. Very strong close by SOFI right now, looking pretty good. Daily bulls establishing some control, but SOFI's expected move tomorrow is 10%. So 10% lower is going to give us some other buy opportunities back down here in the mid-20s. 10% higher, and you're kind of off to the races, right? What I don't want people to do is start FOMOing in SOFI if the stock moves up 10% after earnings overall. Most of all your positions, guys, should have either been built, well, probably back here, but, you know, recently here, and then recently there again when the long-term valuation made a little bit more sense. Weekly looking good, but of course, the price action doesn't matter. I would love to say that, yeah, this is going to be easy follow through for the bulls, but you guys know earnings is a casino, right? Companies can have very good earnings and go down anyways. Matter of fact, that's happened to SOFI more times than not. So that being said, guys, just pay attention to their earnings release tomorrow morning and the price action that then follows thereafter. I am full on my SOFI position. I'm not adding any more. But my price target for SOFI coming into 2027 is somewhere between $40 and $50 as they expand their customer base and offer and expand their product suite. That's what just makes sense, right? If you just follow with an average 10 price to sales multiple in the next 2 years. Moving on to Uber right now. Uber, not looking too bad at all. 2.5% to the upside. Daily uptrend in motion right now. Uber has earnings next Tuesday, so not too much time before those Uber earnings. Weekly bulls protecting what they've built so far, which is a very beautiful and sustained weekly uptrend, reacting nicely from that whole $93 to $90 area where we were highlighting. Not that bad, right? For some long-term shares for Uber around the 90 zone. It was a forward price to earnings multiple of 30, a 1.17 peg, a fantastic free cash flow yield, and very strong metrics for the expansion of the business. So we will see what Uber does if they're able to finally, after earnings, crack above the infamous $100 level. I haven't been buying, well, I mean, the last time that I bought Uber was kind of like last month of September when they're at the lower 90s, but I started building my position on Uber. I mean, I've been in Uber for a long time, guys. I started investing after the IPO, and a lot of my buys have been averages up, but where I stopped buying very heavy was kind of like the mid 60s to low 70s. Now they've just been very small DCAs, very small averages up. But if you are looking to build a new position in Uber, not the worst company at all. Still a lot of upside possibly in this name. And lastly, TSM. TSM also price action a little bit muted, a little bit soft. They had phenomenal earnings a few weeks ago, which we did cover on the channel. Great revenue and EPS expansion rates. At $2.95, the shares still do make sense. It's a low, or rather, low compared to some of the sector peers, right? Low price to earnings at a 28 and a 1.68 peg, which is relatively low in relation to other companies in the sector overall. That being said, very, very, very choppy price action. The bias is indeed long for TSM. They've been consolidating here for a better part of the last 3-4 weeks, maybe just waiting for the price action to kind of catch up with the trade, right? Beautiful weekly uptrend expansion. If you break down for which reason, we're probably going right back down to the 12, around 271. The monthly looking very strong. However, a bit extended right now, guys. Yeah, TSM usually does this. It extends a lot, pulls back, big extensions, big pullbacks with the overall market. So I understand if you don't want to chase TSM up here for short-term swing trades. For long-term shares, it still does make sense to add, but most of your positions should have been built in times prior, right? That being said, if you're new to the markets or whatnot, and you're looking to add TSM, just focus on the fact that it's a company with a very large moat, very large competitive advantages, and, EPS for the next 4 years is very strong. Revenue for the next 4 years is very strong. So we never know how far they will continue this leg of momentum, but TSM would still be a company in which I am dollar cost averaging with my paychecks if I'm building positions in the market. And that is everything for your overall market rundown. Hopefully you guys enjoyed that. Now let's dive into some of the biggest gainers and losers of the day. So we're going to start it off with good old critical minerals. Of course, this sector has been unwinding very ugly monthly candles on MP. Take a look right here from the top, guys. This is a very big pullback. 35, 36%, right? We are coming into local support, but this company is currently trading at very extended multiples, right? $11.61 billion market cap. And how much revenue are they going to be making over the course of the next year? That should be the question that you're always asking yourself. How much are you paying for this company, right? As you can see right here, not that much. And even next year, only $700 million. So it's a minerals company. These usually don't trade at tech multiples right now. Most of the revenue that they will be making is going to be coming in 2027 and 2028 as they start ramping up their operations. Is it a decent buy? Well, a lot of these companies will be needed. This one, USAR type of thing, UUU. There are possibly some nice bets on pullbacks right here, but you do have to have a very long-term thesis for these companies. These companies will have to scale their operations over the next 2-3 years. They will probably get favorable treatment from the government, et cetera, but you always have to understand what you're paying for these stocks. You are paying very expensive multiples for this entire niche of the market. Talk about more things. I'm not going to cover all of them, but just some of the ones that I want to cover. ARCG, the genomics segment of the market. Not one of the ones that gets talked about the most often, but could this be a very nice lottery trade? Maybe for some leap call options for the next 2 years as we have more advancements in medicine with AI? Especially in genomics? The answer is yes. So I am a fan of possibly positioning on this one. In my opinion, it is still early. Now, this sector is filled with a bunch of companies like CRISPR and other things of that nature, and these have just been crushed since 2021. But with the advancements of AI, this is possibly a niche of the market that you might want to look into. Genomics and robotics would probably be the two sectors of the market that don't get the most attention. I mean, they do and they don't at the same time, right? A lot of the focus now has been on data centers and critical minerals, but these narratives could possibly pop up in the next 2 years. So if you wanted to position early, it could be a very interesting bet. Moving on to other companies, very solid companies like Equifax. Equifax is a solid company down here. It's kind of like FICO, right? These companies haven't done too much, but very solid business models overall. They're not for everybody, but for those of you that are looking for some more defensive companies in your portfolio, companies with strong business models, strong recurring revenues, FICO and Equifax, not the worst bets at where they stand right now. Another similar company like that is CP. This is the one that I hold in my long-term portfolio because I guess I'm Canadian and it's one of the best companies that we actually have, right? Not too bad in terms of an industrials play. Very solid consolidation. I enjoy playing the wheel down here in the low $70 range. They have earnings coming up on the Thursday session. Now, this company's been range bound for the last 4 years, but this is a style of company that sometimes I don't mind playing for some possible, the price catching up to the fundamentals. You can see the average analyst price targets. They're well ahead of where we are right now. And look at the EPS gains here, right? EPS and revenue gains over the next few years, decent. So eventually this consolidation will break. And when fundamentals are going to the upside and profitability is improving, your bias is bullish. So it's not the sexiest play, but, in my opinion, it's more of a sure bet than not. At least we know we're not buying something super expensive at that current time. We can talk about HIMS as well. You guys know my stance on HIMS. I mean, we'll cover their earnings when they have them in just about a week's worth of time, next Monday to be specific, right? HIMS for me is starting to be a buy down here in the 40s. So if you want to play some short puts, get some shares down there. Not the worst opportunity in my opinion. This one's been thrown around all over the place for the past 2 quarters, but at 40, the valuation starts to make a bit more sense. And lastly, we got to talk about Vistra. Of course, I brought it up when we covered utilities. Vistra is probably one of my favorite companies in terms of power generation, right, into the next few years, as it has established, a very nice revenue stream from all its different endeavors, right? Natural gas, nuclear, solar, battery power as well. Around 180. It's not that bad of a valuation at all. Low 20s multiple, 0.69 peg, which is very, very, very solid. They've been improving profitability, right, in the last 2 years. If you take a look here, guys, at the forecasts, right, analyst price targets well above the current stock price right now. Beautiful EPS ramp and profitability ramp and big revenue ramp into the next few years as well. So this one, keep it on the watch list, right? It's not for everybody. These energy plays are not for everybody. Special shout out as well to a company like GE Vernova, Right? They've been consolidating for a little bit, not close to the 12-monthly EMA. The valuation is a little bit rich, but they've been establishing a nice base here since July. So that one, right, VST, GE Vernova, these are some of the ones that I'm kind of exploring for some longer term positions. GE Vernova had earnings last week. They went down, but what they did say is that their gas turbines are pretty much sold out, guys, or their electric turbines sold out until 2028. So this company should be having some very nice expansion of the revenue streams. So pay attention to them, right? They're not the companies that we talk the most about on the channel, but the EPS ramp for this company is very clear. The revenue ramp as well for this company is very clear as well. They're not the sexiest plays, right? But as I was kind of saying, right? Sometimes you don't need the sexiest plays. Sometimes you just need consistent players for a very strong narrative. Those are just all the ones to the downside I wanted to cover. Not going to spend too much more time on those. To the upside, of course, we could talk about Qualcomm. Qualcomm finally breaking out. Was this one a good bet around 170? We covered it a lot, right? It wasn't that expensive. It wasn't that expensive at all. I mean, these are 2024 multiples. I haven't done this one for earnings for a while, but they're trading still around a 20 forward multiple. Decent profit margins for the business. And now with the data center expansion, it could possibly be a hot player in the market, right? This EPS curve will be revised with the data center endeavors. The revenue curve possibly going to be revised a bit to the upside as well. Qualcomm, not the sexiest play out there, but if you get a nice back test down here or some short put capacity to possibly just play these weekly upswings into Qualcomm for the next year or so, not the worst proposition. I'll try my best to cover them after earnings when they have them next week overall. Symbotic, probably one of my favorite robotics plays overall. We covered this one a lot. The last time to position was arguably down here in the 50s. I'll be honest with you guys, it is very stretched up here. It's a $41 billion company. But I mean, this is kind of like the narrative of the market right now. A lot of these companies, AI plays, robotics plays, they're starting to trade at like 2027, 28 multiples right now. So a lot of this market right now, you can see it's a $40 billion company, right? It's like trading at like, you know, a 20 forward price to sales multiple. It's only going to be a 10 if you take 2028 revenues. So a lot of these companies, whether it's Symbotic, whether it's NBIS, whether it's companies like, you know, Iris Energy, things of that nature, right? It's all about the story. At this phase in the market, I've been saying it for the last few videos. This phase in the market, it's all about the story. When you look at names like ASTS, you look at names like Rocket Lab as well, you look at names like Robinhood, people are just putting valuations to the side and favoring the story. It's okay to have a few companies like that, but if your entire portfolio is built only on companies like that, you probably will not stand the test of time if the S&P and the Qs have a big correction. I'll remind you guys, it's been a very easy market since April. Of course, there's a lot of bullish tailwinds. We're in a very big bull market. AI megatrend is very real, but just be careful constantly chasing things at the highs, right? At the end of the day, you always have to remember what you're paying for companies. And I know it doesn't matter right now, but you have to have it in the back of your mind. It's just not the best habit to get into, constantly playing momentum with all of your portfolios. It's fine when you have a small portfolio, 25, 30, 50K, you're full risk on, you have very high risk tolerance, and you're just saying, you know what? Now's the time to go for it. I'm going to go for it. Whatever happens, happens. Okay. But if you have like high six figures, and your entire portfolio is here, or like $1 million, and you're building these huge positions in these companies at unfavorable prices, well, just know, guys, right? The pullbacks can sometimes be very painful, so keep that in mind. I just don't want to see any of you guys get hit, you know, with big pullbacks when you're not ready for them. That being said, these companies have been moving really, really well. I mean, ASTS is another example of this, right? It's a $30 billion company. They don't have any revenue for the next few years, right? I mean, I can get behind a story, that's fine, but at the end of the day, you got to show me some actual revenues. You know what I mean? Like, you're trading at $28 billion, which is literally like, you know, it's like a 15 price to sales for 2028 numbers. So you're pulling a lot of the growth forward, guys. And I'm not the biggest fan, you know, there are some exceptions to the rule, like Palantir, where you have a product that nobody else has. But when the whole aspect of the market, like all these momentum names start trading like that, it just becomes dangerous. So if you are trading these, of course, trade with a stop loss at your most recent lows and just go for the expansion, right? For some nice risk to reward trades on names like ASTS, you put the stop loss below the low, you go for the expansion, it's 2-to-1 risk to reward. I mean, you can get behind some trades like that. But for people building long-term positions in these, you got to remember, man, like if you're pricing in 2028 revenues right now, your compound annual growth rates might not be that good. A name like NVIS was indeed a pickup down here. We were talking about it when it was under 100, close to the Microsoft deal. It made sense, right? Down there, it was like in the mid $20 billion range, and the Microsoft deal alone is like close to $20 billion. That being said, when is that money actually going to start coming in? Well, it's only going to start coming in once again in 2027 and 2028. So people are front running the hell out of all of these trades. It makes perfect sense, right? It's all about the story. It's all about the narrative. But as I tell you guys, sometimes only investing in stories, only investing in narratives, you get big pullbacks like this. You know, you get pure FOMO up here and you get big pullbacks like this. A lot of the times it just makes people nervous and it just doesn't build the best trading habits out there. So be careful with this stuff overall. BMNR, in my opinion, is still a decent pickup down here in the mid 50s range. You're looking for Tom Lee to, of course, build up a 5% position on ETH. This could be a nice ETH proxy play. It's a lot of everybody's favorite plays. Whether you choose to play ETH or BMNR, not that bad. Just make sure that you do have some capacity to average down if ETH ever goes back to a full retracement down to 3,500 type of thing. Mercado Libre, we were talking about it down here as if it was one of the best buys in the market, and I truly believe it was. 2,100 down to 2,000 was a nice bet. Over here at 2,280, is it still a nice bet? Yeah, absolutely. We covered it after earnings last time, 1.34 peg and a forward price of sales of 4.39. So there are still some very good deals left in the market if you know where to look. And if this is a style of company that interests you, of course, revenue and EPS growth are very, very strong. Multiple expansion is real for the company as well. And I mean, this is what I want to see, guys. All analyst price targets above the stock, EPS, solid growth right there, and revenue, extremely solid growth as well. So you can find some nice deals in the market, you know, if you know where to look. Other times you can find some very nice price action setups. We talked about Grab, right? Daily downtrend over there. Also, it was a bit of a weekly consolidation phase for Grab. Breakout retest, classic breakout retest, textbook almost. Breakout retest of the 550 level, now looking for some expansion. Grab is not a terrible bet either if you're looking for something small that you can possibly play with, some out-of-the-money call options with a lot of time on it, right? Next target is going to be 7, then you're going to go for 8. Can have some room to run. It's trading at about a $25 billion market cap right now. They're flipping profitable, which is good for the business, flipping positive EPS. Usually I get more interested in companies when that is the case. And revenue as well. Nice revenue growth here for the next 2 years. Not crazy valuations either. You talk about Robinhood. Robinhood is just, I mean, Robinhood is super expensive up here, right? But once again, it's a story company, right? It's a brokerage. It's literally only a brokerage. And at 107, they were already trading at a forward price to earnings of close to 80. Right now, it's going to be probably close to 100 and a 6 peg. And a 25 price to sales, right? End of the day, guys, it's literally just a brokerage. I understand that they have very good margins, record deposits, more subscribers, more products under their belt as well, right? But it's always a question of how much are you paying for this company that's a $130 billion company in terms of market cap, yeah? And right now, how much revenue they bring in? $4 billion. Now, they'll be doing a good job of increasing that to 7 by 2028, but still, it trades like a tech stock. And at the end of the day, right, they do not have, they don't have, you know, the growth that a lot of these tech companies do have. So it's a story company, but in my opinion, buying Robinhood up here, right, it's just risky, guys, at the end of the day, right? So that's just a lot of the stocks I wanted to cover. Again, I know we cover them almost every day because they're always on the top right there, but I just don't want you guys to have FOMO. Same thing for AppLovin. AppLovin was a phenomenal pickup back here after their earnings, and we covered it, right, for the good old breakout, retest, and run. The fundamentals made sense on AppLovin down there. It was like a 1.3 peg, right? 54 price to sales, but a 1.3 peg. Price to sales was excessively high. Here at $600 to $700, that's when I got to pump the brakes, right? Eventually, you got to pump the brakes somewhere. The $217 billion company, how much revenue are these guys bringing in, right? So you always got to ask yourself, how much revenue are they bringing in? 5 this year, and in 2028, 12. So even, right, even with 2028 revenues, you're still paying 20 price to sales, right? It's just, in my opinion, a lot of these are just too much. I'm a big fan of playing these growth stocks, but there's times to position where you can lock in a great compound annual growth rate. And there's other times where you just have to tell yourself, you know what? I missed it. I'll look for other opportunities. It is what it is. You know, I'll look for better buys eventually. Or if there's a big market correction, you know, keep it on your watch list, because when there's big corrections, these tend to drop more than others because of their extended valuations. And those are kind of the first ones that I do want to play. Now, I'm not going to spend more time than that. We covered pretty much everything. I'll try to diversify, you know, in the next few videos. If it's still the same names on the top right here, I'll try to diversify and go into plays that I'm looking for. Rather than being a biggest gainers and losers section, maybe I'll just go through this section and tell you guys which names interest me the most. If you want me to do that, instead of just going over the same names over and over and over, just let me know, right? And I'll kind of try to pick apart some of the names that are green or red on the day that I still think could be some nice trading opportunities. I think there might be, you know, a bit more substance to that analysis rather than going over the same names that have been printing the highs for the last month and a half. That is pretty much everything for that section right there. And lastly, for my portfolio, we're not going to spend too much time on it because we did a very big recap of my portfolio in Saturday's video. If you guys want to see what I did today, not too much, honestly. I'm waiting to play. I'll be honest with you. I never tell people to play earnings. I will be playing a lot of these earnings myself. Some of these big tech names, especially either with call debit spreads on the ones that I'm bullish on that I don't have yet, and possibly even some short puts under the market on a lot of these tech names and maybe even names like Visa as well. That being said, what did I do today? We wound down a couple trades, right? We took a BMNR new trade last week on Friday, 45 strike short puts for 75 cents. I was able to close that in one single day, guys, for 75% ROI, close it at 18. Why? I'm freeing up some capital for a lot of the earnings plays that I'm going to take. That being said, I took a new trade because they offered it to me, 182.5 on Vistra, 94 cents for Friday. 0.5%. It was one that I was telling you guys to watch out for. And whoops, that's not the chart. This is the chart, right? We've talked about Vistra a lot in today's video. 182 is kind of down there at the lower end of the support range that they built overall. So we're currently making decent money on that one. BITX was closed as well. This was a trade that I found last week on a big red day on Bitcoin. 69 cents for the 40 strike. I closed it today for 10 cents. Once again, freeing up some capital for earnings trades, or I guess you could say freeing up some capital for a Vistra trade that I took. And then I took a few lottery trades for earnings. So these are the types of earnings plays that I talked about in yesterday's top 5 options video. I'm looking for 2 times the expected move, short puts, in a support. The goal is I'm only holding these for one single day. So you will not see me get 0.5% for these, which is my normal structure, but I am getting some decent credits right here. And I'm going for 2 times the expected move in a support. So PayPal, 60 put down there for 23 cents. Where's 60 on PayPal, guys? That would be a heck of a big drop on this stock. I would have to be all the way down here, 14% lower for me to be at risk of being assigned or me at risk of taking a loss. I will take that chance provided that I'm getting good distance into a support level. That's the trade on PayPal. I did the exact same thing on UPS. 77 strike for 22 cents. My goal is to be out of these by tomorrow morning. If the stock is flat or up after earnings, those trades become worthless because they have so much distance on them. See, UPS, I have a 77. Where's 77 from here? 77 from here, guys, is literally a 14% decline into support, right? So if they're not into support, I will not take them, even if I can get 2 standard deviations away. Resolve, we played some small covered calls here. We got assigned back a few weeks ago at $5 strike for 60 cents. We wrote covered calls for next week at the $5 strike again for 32 cents. Our assignment cost on Resolve is very low right now, $4.08 after being in this one for about a month and a bit right now. And the last lottery trade was APLD, which we got last week on the big pullbacks on those names, NBIS, Iris Energy, APLD. We took the 25 strike for this Friday for 30 cents. Close it today for 5 cents. So some nice wins overall in terms of the portfolio. The portfolio looks like this. Where do we stand right now? Not much. Today we were up about 1.75% if I remember. This is the after hours move and nothing else has changed. I still have all of my same assignments, Affirm, Amazon, BITX. We have some swing trades on Duolingo, Restoration Hardware, Rocket, and Resolve and Sentinel-1 are also assignments. My leaps are still in place, didn't change those. IBIT, Sentinel-1, TLT, Visa, and XLV. All of these short puts are the same. You can see a bunch of covered calls here on our assignments. Short puts that I'm running, we covered on Saturday, haven't changed. Oscar Health looking good. PayPal is the earnings trade, we covered it. Rocket Mortgage covered calls. Resolve covered calls. Sentinel-1 covered calls, of course. SMR, this one was a nice trade we took as well last week when all those were getting crushed. 30 strike, currently running some nice profits. We'll see if we can wind it down tomorrow, free up some more buying power. I have 2 SOFI contracts. One we took last week, 20 strike for 15 cents. I would be very surprised if SOFI hits 20, but we'll see what happens. And then I took one today, 24, 2 standard deviations away, 20% move away from the current price. And we got like 16, 17 cents for it early this morning. We'll see what happens. I should be able to wind these two down unless SOFI drops 20+% tomorrow, which would be surprising. I should be able to wind these two down tomorrow. And then UPS and Vistra we talked about already. All the other swing trades for call debit spreads are exactly the same. No change there. If you want more of a rundown of why I took these, you can refer to Saturday's video. But decent performance on the portfolio, all-time highs. Portfolio is currently up about 33, 34% year to date. After the big tariff sell-off, it took a while for us to come back, but currently still beating the indexes. We'll see how much we can actually get out of this portfolio by the end of the year in terms of ROI. So that being said, guys, that's everything for today's video. Hopefully you guys enjoyed. If you did, consider dropping a like and subscribing to the channel. It helps me with the growth of the channel. And ask me any questions that you want down below the comment section. I'll be answering a ton of questions tonight and tomorrow for you guys. Last but not least, if you wanted to join a trading and investing community of over 300 members where you don't have to trade or invest in the markets alone, you can kind of do so with us. You might consider joining our trading and investing community. In that community, you get access to all of my trades in real time, whether those are the infamous wheel trades, the earnings trades that I take sometimes, the directional trades, a lot of the call options, the call debit spreads, swing trades with shares, my long-term portfolio investments as well, which I do not share on YouTube. Here's just a lot of the trades that we've made in the last few months. The green little check marks are wins. The red little circles are losses. The little targets here are assignments, of course. We like to keep our wins frequent and big, and we like to keep our losses infrequent and small. Here's just a lot of the trades that we've made over the course of the past few months. I'm always transparent with both on the channel, and I've been doing that for the past 2 years with you guys, of course. You get access to all those trades. You also get access to our private morning live streams Monday through Friday for about 2-3 hours. At the open, I trade live, and I also answer all your questions on your stocks, your options, your long-term portfolios. It's a good place to interact with me. You can also ask me all your questions in our chat rooms throughout the day. I'm very fast to answer. You also get access to our private video educational section. Over 15 hours of me teaching technical analysis, fundamental analysis, how to build a long-term portfolio, how to build various trading strategies in a trading portfolio, informational videos on how I structure my leaps, my debit spreads, my credit spreads, advanced wheel strategies as well. So much information that I will not put on YouTube is in that section, and our members usually learn a tremendous amount from that section alone. Last but not least, you get access to all of my charts and all of my watch lists. Whenever you guys see support resistance on the charts, if you just want to copy them and copy all of my earnings breakdowns and fundamental analysis, right? You guys can copy all that. It comes included in the Discord, and you can also copy all my watch lists that I use to trade in the markets every day. Very easy to copy them. Takes like 15, 20 seconds, and they are all yours. If any of that interests you, you might consider joining the community with the link down below in the video description. And you get 30% off your first month if you wanted to try it out with code capital letters Halloween 25 for 2025. So once again, Halloween 25. I'll put it down in the link of the description. As I said, 30% off your first month. If you wanted to come, join the group and try it out and see how you like it. That's it for me, guys. Take care. See you tomorrow after the close. Peace.